Welcome back to Alberta Primetime and our nightly vocal point now. The Monday Money panel debates the economic impact of the federal election and 8 shocks about to slam the global economy and perhaps our recovery. Beth Hamilton-Keene is Director and Portfolio Manager with Moore Investment Management in Calgary. She's in studio tonight. Shafik Hirani is a Director and Senior Executive Financial Advisor with Investors Group Calgary. And Dan Sumner is an economist with ATB Financial. Welcome back to Alberta Primetime, everyone.
Thank you.
Thank you.
Thank you.
Well, Canadians are going to the polls for a third time in 5 years with a direct cost of about $300 million. But a Scotia Capital economist says an election would likely ensure interest rates remain unchanged this spring. Beth, a lot of prospective home buyers or car buyers might think that that's fairly good news. But will that last very long, the interest rates remaining?
Well, it's a short-term relief. The uncertainty about the election is what will bring forth a little bit of relief with the interest rates. But no, we don't think it's going to last. The reality is interest rates are pretty low and the growth seems to be going quite well in Canada. As such, we should see interest rates begin to increase once we know who our new political leader is.
And perhaps we can talk about how quickly they will increase. I mean, it's always great to have a little bit of sure thing for a month or two, but Shafik, some numbers out today. I mean, we're looking at the dollar, inflation, whatnot. What does that tell us about how quickly interest rates might jump up after that election?
I think the Canadian government has learned from their past mistakes. So how there was quantitative easing over the past couple of years, I would expect a quantitative tightening. So the next meeting and the next announcements in April, and again, nobody expects rates to go up in April. However, the election that Harper called is May 2nd, and then the announcement after that is May 31st. So that's the questionable time whether rates will go up and that time. And I think Mark Carney did say that he is looking to maybe tighten a little bit. I would expect a quarter point, but again, it's a guessing game.
Sorry, you would expect a quarter point before the election or
no,
at that May 31st
no.
meeting?
At the May 31st meeting. I don't think they're going to do anything during an election. I think that was reflected in today's bond prices. The bonds were down a little bit.
And Dan, we know the dollar leaped today. So, I mean, this is sort of more evidence, right, that we're not going to have much relief from an interest rate increase for very long after that vote.
Yeah, I agree. We're unlikely to see rates move in the really short term here. Just beyond also what's going on with the election, there is a lot of uncertainty going on in the world right now. There's been some major events, the turmoil in Egypt, the turmoil in Japan. We've got new sovereign debt woes coming out of Europe. Even though things in the domestic Canadian economy are quite strong, the Bank of Canada has a lot of the global risks are quite high, and I think the Bank of Canada is going to be hesitant before they're going to start tightening.
Well, and we're actually going to talk about that a lot more in our second segment. A lot of people are getting more scared than just sort of, gee, this is concerning. We'll talk about that next segment right now. Let me stick with the election for a second. Dan, the Harper government has really been lobbying hard to stop the European Union from slapping that dirty label on Alberta's oil sands. The EU is moving forward on it again, though. With election mode happening in Canada, the politicians are busy doing other things. Is Alberta on its own here?
Well, there's no question that the election might sideline the government's lobbying woes in Europe for a little bit. But, over kind of the medium term, the Canadian government and the Alberta government have just about as much incentive to get the oil sands developed as the Canadian oil companies do, or as oil companies in general do. There is a massive amount of economic activity, not only in Alberta, that's dependent on the oil sands. And if there's a major backlash against them, the Canadian economy is going to suffer dramatically. And so it's therefore in policymakers' interests as much as oil companies' interests.
Okay. Beth, generally, what happens with businesses, our employers, the markets, the places we invest during an election campaign?
Well, generally, the history has shown us that employment does improve, but it's usually all about those election-type jobs as a result. So, to me, that's artificial. However, a lot of the promises and a lot of the campaigning that's done is usually based on kind of the economic fundamentals and how the various governments can improve fundamentals for us.
So is it a real wait-and-see time?
It really is. There's not a lot that can be done. If you think about politically, there's not a lot that can be done. So, as such, we have to wait and see. Really, though, it's not a real dramatic swing from one party to the next. We generally have a pretty good, tight consensus around our situation compared to some of the other countries around the world going through this.
Shafik, does that mean that it's a really good time to do some investing, play the stock markets a little bit, because maybe there's that level of certainty in one aspect?
Well, first of all, I'm not sure I 100% agree with Beth on this comment, because I think anytime you're going into an election, you're going into a little bit of uncertainty. And when we're going into uncertainty, you know, if we're driving into a fog, we tend to slow down. And so the last few elections, they have not impacted the Canadian dollar adversely or positively. So we can't project which way the Canadian dollar is going to go. What we can project is that there's going to be a little bit of volatility. So is it a good time to invest? Yeah, I think it always is. The key is not to overinvest on bets based on the outcome of an election. I don't think that's wise.
But I think in Canada, our uncertainty is pretty narrow in scope.
Okay.
Yes, I agree.
Dan, a lot of people waiting to find out if the Conservatives win and we get corporate tax cuts. How significant is that?
You know, it's hard to say at this point. Just in the recent budget that's now not going to pass because the government was voted down, we did see some tax increases in Alberta, in the oil sands in particular. And you know, while those weren't major tax increases, they would have had potentially a little bit of impact on oil companies' bottom lines. Overall, you know, we know the Liberals have been asking for higher corporate taxes. I don't think you know, we're talking a major difference. You know, these kind of things usually don't have a giant impact on the economy. Budgets, elections, these are you know, processes which are more political processes than economic processes.
As our economy picks up here, a strategist at Citigroup is issuing a dire warning titled 8 Shocks That Are About to Slam the Global Economy. They are higher food prices in emerging markets such as India and China, higher interest rates creating tighter money policies in emerging markets, Middle East political crises, surging oil prices, higher interest rates in developed markets such as places like England, the end of U.S. quantitative easing, that's the government bond buying and end of easy money policies, fiscal cuts and sovereign debt crises in places like Greece and Ireland, and finally Japan's earthquake and tsunami disaster. Beth, is there any reason to think we in Canada, and Alberta in particular, would be sheltered from these 8 things about to slam the world?
We certainly may be sheltered from some, but there's quite a few of them will have a direct impact on us. One in particular, of course, no big surprise, the commodity prices and the surge in commodity prices. One of the things that we've been spending some time thinking about is really how sustainable are these commodity price surges. And we look back towards the marginal cost of production of many commodities. And right now, there's quite a gap between the cost of production and the actual price. And how sustainable is that? And there are companies across Canada, and particularly in Alberta, that will be affected if we go through a commodity price shock.
The people that consume the commodities.
Consume the commodities, work for the companies that produce the commodities, right through to the banks in Canada. We could see some volatility in all of those companies.
Dan, this report is a real doomsday piece. How seriously are you taking it?
There's no question that these are major issues that are confronting the world. Now, in Alberta, as Beth just mentioned, we are sheltered from some of these impacts. You know, higher food prices is going to be a major thing for developing countries, but not so much for Alberta. You know, if the price of a loaf of bread goes from $3 to $5, it's not going to have a major impact on the average Albertan. But in a developing country where you spend maybe half of your income on food, it's huge.
Shafik, your take on this at all? Is there any one of those 8 shocks that stands out for you, particularly as a financial business type in Alberta?
Well, I think not. They're each pretty sizable in their magnitude when it comes to inflation in the developing markets. Food prices, the Japanese impact is very new, and there's a lot of uncertainty going on with the Japanese impact. They just flooded the economy with $200 billion, and they announced $200 billion more. And the Japanese are the biggest buyer of U.S. Treasury bills, so that's going to have an impact on the U.S. dollar as well as the yen. So all that does sort of play into a global macroeconomic perspective. As Albertans, the lack of nuclear investment in Japan actually could help out Albertans, because there is a benefit of a movement towards more commodities. And again, the inflation causes, probably a rise in gold itself.
Beth, are there any upsides to this?
Well, there could certainly be upsides, and one of the big questions that remains is, can we grow out of this? Whether it's in Canada, which we've seen evidence we've begun to grow out of it, but if we look around the world, particularly with quantitative easing coming off, the deficits growing and so on and so forth, can we grow our way out of it, or do we really have to continue to rope things in? And at this point, there is hope that we can grow out of it. The scenarios and the probabilities, those change day to day, but there's certainly hope.
Okay, so it's not a death sentence just yet. Dan, is there things that Albertans should be doing, maybe even our governments, our companies, to shelter the impact, to create a buffer if the worst does happen?
Yeah, oh, if the worst does happen, absolutely. As I mentioned, though, a lot of these impacts are big global issues. Some of them affect Alberta. One of the ones that does is rising interest rates. We have seen over the last few years, Canadians and Albertans have taken on a lot of debt. Interest rates have been abnormally low for quite some time now, and that's going to change in the long run. And I think people should get used to paying higher debt servicing costs.
Right. The mortgage, those car payments get a lot more expensive when the percent changes. Thank you so much for all of your insights tonight.